Yes, hello, and to continue the discussion on our subject, we're now on the traditional models of financial statements analysis. So to start with, we have four traditional techniques of interpreting the financial statements, and number one is the horizontal or comparative analysis. Second is the trend analysis. Third is the vertical or ordinary size analysis. And lastly, the financial mix ratio analysis. So let's discuss this one by one. So we'll start with the horizontal or comparative analysis. So horizontal analysis presents the differences in absolute amount and in percentage between two compared variables. So when we speak of horizontal analysis, we analyze financial statements and financial data in a horizontal manner. Therefore, we are analyzing and comparing two different years. For example, we are comparing the 2020 financial data with the 2019 financial data. So there is horizontal analysis. No, so we have here the formula to get the percentage of change, that is the amount of change divided by the base. So I will share an example. So you have there an example also in your module. So I have to share another screen, and yes, where is it? Okay. I'm having trouble with my screen. Share screen, and I think we're here. So we have here, for example, for our horizontal analysis, we have this is an example of balance sheet. There we have two balance sheets here, comparative balance sheets for the year 2019 and 2020. We have here the assets, we have the current assets, total current assets, we have the total assets, and the liabilities, and our shareholders' equity here. So we have the 2019 data and the 2020 data. So we need to have it analyzed by getting first the change from 2019 to 2020 and the percentage of change. So to have it, I have here the for cash and cash equivalents. So from 3,000 cash for 2019, it became 5,000 in 2020. So we have 2,000 change. That's positive since 2019 is lower than the 2020. So 2,000 change, I have already placed the amount since I cannot subtract. Okay, my letter P. Then we have for trade and other receivables, so 25 less the 2019. So there is a decrease in our receivables of 15,000 for the inventory and for our total current assets. So there. Then for the investment property, so there is a decrease of 15,000 for the property and equipment. So I'll just do it this way. Oops. This way. Then next is the current liabilities. Change. Oops. See. Okay. So I'll just copy it, and so we have already get the change in terms of peso. So we have to get the percentage of change, that is the change divided by the base year. The base year is our 2019. The starting point is 2019. So okay, so we have to do it this way, and that's it. So this is the percentage change for each accounts of our balance sheet. So this time, after getting the change in peso and the percentage change, this is the time that we analyze the result. So for cash, there is a 66.67% change, and that is increase. And that means, yes, it's good that we have increased our cash, no, from 3,000 to 5,000. So that's favorable for us. No, we have increased our cash. When it comes to trade payables, from 40,000 to 25,000, that's negative 37.5%. Negative doesn't mean there's something wrong, no, when it comes to this. No, because when we analyze, first is for 2019, our trade and other receivables is 40,000. Then in 2020, it's 25,000. So there is a decrease in our accounts receivable. So therefore, that means that the company has been efficiently collecting its accounts receivable. So that's why it has a negative change. So that means it's it should be F. F. So this is favorable to the company. No, it indicates that there is effectivity when it comes to collection. And for our inventory, we have an increase of 3,000, and that's 11.11%. So that means our inventory is increased. So maybe our purchases was that high, and the inventory sold is not less, no, and it doesn't mean if your inventories increase, doesn't mean na wala mo, hindi ka namin magbaligya, no. The 3,000 is not that it's not that dako gid ang effect, but kung amo ni siya, no, kung medyo gamay man lang ang imo nga negosyo, so 3,000 is big. But kung dako ang business, so 3,000 is not that big. So hindi siya shadow big deal. So I'll just leave with that, no. Pero kung mag-example, mag 100,000 ni, then inventory mo is 27,000. So that means there's something tama na gid kadako sa imo na pamakal, then wala mo man mayo na baligya. So it imposes something negative na sa business. Okay, so for the total current assets, nag-decrease siya by 17.91%, but then we have analyzed each account. So let's proceed with the non-current assets. So for the non-current assets for investment property, from 15,000 to 0. So maybe ang ila investment property ginbaligya nila, that's why nag-zero na siya sa 2020. For the property, plant, and equipment, from 100 to 75, so there is a decrease in our property, plant, and equipment of 25%, and also representing 25,000, representing 25% as percentage change. So it might be due to the accumulated to the depreciation expense recognized for the year, or might be may ginbaligya ang company, no, asang asset nga gamay man lang ang amount. For the intangible assets, we have no change, and for the other non-current assets, there might be acquisition, new acquisition, no? There is an increase. Mostly there must be. Yeah, probably nag-acquire some new non-current assets ang company. So there is 300% increase for the total current assets and the total assets. This is the change. And let's go to the current liabilities. Our current liabilities from 30,000 to 47,000. So we have an increase of 70,000. That means there is an additional accounts payable that has been incurred by the company, and that represents 56.67% from our base year amount of 30,000. For our long-term liabilities, we have decreased. We have a decrease of 14,000, representing 15.91% change. So when we analyze this, this means that there is a payment for our long-term liabilities. Okay, and for our preference equity, there is a decrease of our preference equity of 1,000. There might be maybe may nagbuhi nila preference base may nag withdraw investor, no, something like that. And also for the ordinary equity, there are a lot of reasons why nga naganubo ang aton equity. There might be distribution of kay kung stock dividends mag-increase na siya kung nag-distribute siya sang stock dividends. There might be may nag-withdraw nga mga investors, no, sang ilang nga shares. So may nag-increase kita. Now, and share premium, we have no change for the retained earnings. Oh, yes, diri tayo makita from 13,000 to negative 12,000. Diri, this is very important that we have to analyze. Our retained earnings has decreased, no, by 25%, representing 192.31% of our base year amount of 13,000. There are a lot of reasons why nagnubo aton retained earnings. Might be, and most probably it's in the company incurred a lot of loss by 2020. No, it's almost 25,000. Then we have here the total shareholders equity a change, and for our total liabilities and shareholders equity a change. So that's the horizontal analysis. So we analyze data in a horizontal manner, and we are comparing 2 years, no, for horizontal analysis. No, we not only the balance sheet that in which we are performing horizontal analysis, we also have for the income statement, cash flows, no, financial data in which we can have it horizontally analyzed, no, to identify reasons why there were changes as this, no, as much as this, as kung jutay or dako ang mga differences, and we investigate why there is such differences. So let's go back to our PowerPoint. I'd like to check if it's, yes, this is. So we're done with the horizontal analysis. Let's go to the trend analysis. So the trend analysis is this is similar to horizontal analysis, but we are comparing more than 2. Trend analysis extends beyond 2 years. So trend analysis uses indexes and ratios to simplify the visible complications of numbers contained in the financial reports. Financial data expressed in indexes and ratios are easily readable than those presented in terms of millions of pesos. So we perform trend analysis to simplify our financial reporting and analysis. No, kay when you present, okay lang if you present to accountants, but if you are presenting to non-accountants and you give them millions of ang amount is expressed in millions, so there might be they will find it voluminous, and they will find it difficult to understand. So we have this trend analysis to easily read and understand the financial reports that is being issued. So let's go back to the Excel file for the example. So I always check kung anong nagagawa sa akong screen, okay? Okay. So yes, trend analysis. We have here the data. I get this from your module so that you have also reference there. So in here, the data that has been extracted is for sales, current assets, and current liabilities for the years 2016 to 2020. So these are the data now for each account and for each year. So we have 5 years to be analyzed. So it says there, first we have to use 2020 as our base year. So our base year is 2020. That means this is our base. Okay, So I have to drag it down. Okay. Then for 2019, so base year ta is 2019. So from here, oops, why? Oh, okay. It's divide. Okay. Need to check with our module if it's right. Trend analysis, yes. So we are right. So for 2018, so what I have done in 2019 is, since our base year is our 2020, so para hindi ka magtalang when we speak of base year, that would be our denominator, and our for this year, now for the 2019, for example, so the amount here would be our numerator, our denominator is our base year, which is 2020. So for 2018, same. For sales is 9,200 divided by our base year of 10,800 for 2020. Okay, so I have to drag it down. That's right. And for 2017, this year ta is 2020. And for 2016, 8,000 divided by 10,800. Then we're done with the first requirement there, which is we will have trend analysis in which we are using 2020 our base year. So if we will analyze 2020, of course, it's our 100%. No? But when it comes to 2019, so our sales is 88.89% of our 2020 sales. So amo na siya ang linya sina. So therefore, kung mag-analyze kita from 9,600 to 10,000, there is an increase of 11.11%, 100% plus 88.89%. So there is an increase of 11.11% when it comes to sales, and almost I think it's 16.95% for the current liabilities, and I think it's 4.36. Nope. Yes, 4.36. 4.26 increase for our liability from 2019 to 2020. For 2018, it means that our sales for 2018 is 85.19% of our sales when it comes to our sales 2020, and yes, and so on. So amo na siya class. So 80% in 2017 is 80%, no? 80% ang sales ta for 2017 based on our 2020 data. And yes, and so on. Mamana siya sa current assets at current liabilities. But if we will use 2016 as our base year, that means 2016 will be our starting point. So 2016 would be 100%. Oops. Then for 2017, divide natin. Oops, no. 2017, right? So, dire, mas maintindihan natin if we will use 2016 as our base year kay naga-forward na ta from 2016, 2017, 2018, 2019. Lain niya, if we will use 2020 as our base year, do nagapa-atras kita. In here, this is much easier to analyze. Now, we will see kung pila gid ang increase naton, makita naton. I think this is much easier for me. Wait. Okay. So if we will analyze trend analysis 2016 as our base year, 2016 is our starting point, so that's 100%. By 2017, our sales is 108% of our base amount, no? For 2016, which is 8,000. So, makita natin dire nga from 2016, we have an increased sales of 8%. We have an increase in our current assets of 1.89%, no, from 2016. And we have increased 30% in our current liabilities from 2016. So, for 2018, 115% na si sales. For 2018, based on our 2016 data of 8,000. So 15%, 99.78% si current assets, and 140% si current liabilities. So this means there is an increase of 15%, no? 15% excess ni 100%. 15% an increase na ni sales, no, for 2018, and there is a decrease of yes, very insignificant, 20.22% in our current assets, and we have an increase of 40% sa ating current liabilities. For 2019, we have an increase of 20% sa sales. We have a decrease of 1.98% sa ating current assets, and our current liabilities has increased to 180% now from 250 nga liability sa atong base year na 2016. And for our sales, we have an increase of 35% from 2016 to 2020. Nag-increase, may increase kita ng 35%. Our current assets has increased to 118.02%, and excuse me, for the current liabilities, we have an increase by 90%. We increased by 90% ang increase ang ating current liabilities. So we keep on increasing sa current liabilities. For the current assets, nag-increase kita, then nag-decrease, then nag-decrease, then nag-increase. And for our sales, it's very good since we are increasing each year. So that is trend analysis. So let's go back to our PowerPoint presentation. So we're done with this. So let's proceed to the third, the financial mix ratios. Oh, trend. No, the vertical or common size analysis. So this is opposite with our horizontal analysis. So since we are what you call this? We are analyzing one financial statement, no, sa isa ka year, or also we can also have 2 years nga vertically analyzed para makita naton. So the vertical or common size analysis gets the proportional component of the variables in the financial statements in relation to a chosen base. So we have a chosen base. So as in horizontal analysis, the financial statements are treated individually and each is analyzed independent of the other. So to understand this, let's go back to the Excel file, having the vertical analysis. So it's still the same with your module. You have here 2 corporations. There is a lot of ways now of applying this analysis now for as long as it is relevant to our decision making. So in here we are comparing 2 different corporations now when it comes to their current assets, long-term investments, PPE, intangibles, and other assets. So I have here now in which we are going to get or to perform the vertical analysis. So I have here the first starting point. Our base account is our total assets, no? These are all assets. So kaunta kung pila ang percentage ni current assets sa total assets, ni long-term investments kay total assets, PPE, intangibles, other assets, no? Each of this in relation to our total assets. So for the current assets, for AB Corporation, we have 75%, no? Current assets. This means that current assets of AB Corporation represent 75% of its total asset. And for its long-term investment, this represents 10%. And oops, why? Okay. Sige, isa-isang ko na lang. Kay hindi kitao ng ano. Hindi man siya madamo. Okay. Okay. So since our total asset is our total assets is our chosen base, so this is 100%. So to analyze for AB Corporation, current assets represent 75% of its total assets. For its long-term investment, it's 10% of its total assets. The same with its PPE. For the intangibles, the intangibles represents 3% of its total assets of EB Corporation, and other assets represents 2% of its total assets. So that's vertical analysis, no? Nagapatindog ang aton nga analysis. So we have for NJ Corporation divided by, they have the same total assets, but they have different amount for each component. So we have to compare. And here, of course, this is 100%. So for NJ Corporation, its current assets represent 25%. Long-term investment is 60%. PPE is 10%. Intangibles is 3%. And other assets is 2%. So if you see the difference, EV Corporation has more current assets than NJ Corporation. So NJ Corporation has more long-term investments than AV Corporation. So dira na ton makita, no, we can see the difference between the two entities using the vertical analysis. So that's vertical analysis. Then let's go back to the PowerPoint presentation. So I think we're done with the three financial statement analysis method. So let's go to the fourth financial statement analysis method. So our fourth is the financial mix ratios. So under financial mix ratios, there are at least 4 basic classification of financial mix ratio. First is the profitability ratios, second is growth ratios, third is liquidity ratios, and fourth is leverage ratios. And we have discussed this in our first discussion, my first video, the leverage ratio. So I have just to discuss these three, the profitability, growth, and liquidity ratios. So let's go with the profitability ratios. So profitability is a measure of operating effectiveness. Please take note with that. So it measures the ability of the business to recover long-term investment from money generated by its normal operating activity. So we have the basic profitability ratios here. We have the GP rate, its formula, operating income rate, return on sales, return on investment, return on equity, and earnings per share. So let's go back to the, okay, we have here notes. First, we have to consider this first. Profit is the same as net profit, still the same. The return on sales is also called profit margin, and the return on investment is also called as the return on assets, or simply accounting rate of return. So that's what we have to note. So let's go to our, yes, we have here the profitability. So you have here two different entities, F company and T company. So they have here the data for their sales, profit, interest expense, total assets, ordinary shareholders equity, preference dividends, cumulative, number of ordinary shares, and tax rate. So I have also here a copy of formula. So para hindi na magbalik-balik sa aton nga PowerPoint. So first is our gross profit rate. We will first get for F company. Our gross profit rate is gross profit divided by our net sales. So our gross profit is 3,050 divided by our sales of 80,000. So that's 3.813%. Return on sales is profit less net sales. So ano siyang ginamin niya nga profit. Okay, so profit less the interest expense. And I assume this is profit before tax. So we don't have to deduct the tax now. So this may naka-indicate that there is a tax rate of 40%. So return on sales, that would be net sales. So gin-divide naton ang aton nga operating the return on sales. Profit divided by the net sales. So yes, we have to deduct the interest expense from our profit. That's why 3,050 less 50. So that would be 3,000 divided by our sales of 80,000. So our return on sales is 3.75%. Return on investment is profit plus interest expense net of tax divided by the average investment. So I have to check. Might be wala na. Basi wala pug ako inside sa video. I have to check. Okay. Okay, so profit, return on investment. So 3,050 profit plus. So 3,050 plus interest expense. Interest expense of 50 divided net of tax. So net of tax, that would be 0.6. So muna siya class. Okay lang. Ano ko danay ha, i-explain ko sa inyo muna sa Excel. So okay, we're done with our numerator. So B4 is profit of 3,050 plus B5 is interest expense. It says here interest expense net of tax. So interest expense is 50. Y multiplied to 0.6. That would be 1 less tax rate, no? Kay 50, kung butang ta, this is gross of tax. Wala pa na siya nabuhinan tax. So kung buhinan mo siya tax na 40%, so ang bilin niya is 60%. So that is why nga 0.6 bin-multiply ta siya 0.6. Okay? So muna sa divided by average investment. Average investment is the total assets. Okay? So our return on investment is 25.67%. For our return in equity, that would be profit divided by average shareholders' equity. So profit divided by shareholders' equity. Yes, and that's 50.833%. And for our earnings per share is profit less preference dividends requirement divided by our average ordinary shares outstanding. So profit less dividend is given divided by average ordinary shares, and it's also given. And we will not present this in a percentage since we are calculating earnings per share. Okay. So it's 4.75 peso, earnings per share. So I have to check. Okay, 47. Why return on ordinary equity? Okay. I will admit my mistake here. Return on equity. Return on equity. It's return on equity. So I have to let's check. Sorry class, hindi ko there are yes. Inet mo pa siya sa tax. Okay. Na-tested lang ako ng patience. Sometimes there are some data misleading and different interpretations, no? Siya makuha ang 47.5%. Why? Less preference. Really? Let's return on equity. Return on plus minus. Plus, ginaano ko, naman is profit less preference dividends. So, interest ko yan. It's 200. Okay. So, I complicate things. Amo na siya, class, ang ginambal ko sa inyo nga there are damo interpretations no, when it comes maghambal ka profit. So, dire, ang ginagamit niya is profit less the dividends. No, kaya mo nang mo. Dito, return on equity. So, profit less the dividends divided by the ordinary shareholders, the ordinary equity. That's ROE, area of profit divided by average shareholders equity. So, it's not return on equity. Return on ordinary equity. Okay, para hindi ka mo magtalang. Okay, so that's it. The return on ordinary equity. That's profit less the dividends divided by the ordinary shareholders equity. So, ang analysis na sa aton formula, now for the return on ordinary equity, that would be profit less the dividends na ginhatag naton, gin-distribute. So, ang bilin, amo na siya ang i-divide naton sa aton nga ordinary shareholders equity, kaya amo na ang ilang nga tungaan, no? Kaya amo na siya ang residual na sang profit after nga gin-distribute ang dividends. Amo na sa. So, may return si ordinary equity nga 47.5%, and that's good kay kataas. Then for the gross profit rate, we'll check if okay. So, move ta lang. Iman lang sa and it's good. No, gross profit rate is 6.4. Return on sales is 6%. So, ako lang dyan nagbutang sa return on sales. Return on investment is 30. Oh, why? 33. Why? Why? And I think I am mistaken na naman here. It says here nga 35 point. 25.67. Akagin minus ko. Sorry. Kasi may naghambal na sa inyo nga plus na that means. Okay, sorry. So that's it, 33.2%. Return on investment is profit plus interest expense net of tax divided by average investment. So our average investment here is the total asset. So so return on equity, again, return on equity, that would be our profit less our dividends divided by our ordinary shareholders equity. So it's 88%, and our earnings per share is 8.8 pesos. Okay, so that's our profitability ratio. So when we compare, when it comes to gross profit rate, T company is more profitable than F company. And also when it comes to return on sales, this is better, return on investment. And yes, T company is better than F company, since its gross profit rate, return on sales, return on investment, return on equity, and its earnings per share are higher than that of F company. So when it comes to profitability ratios, it's better to have higher ratios, since we are dealing with profitability. So kung profitability, dapat taaso na to ng aton nga performance. So that's it for the profitability ratios. Let's go back to the PowerPoint. So let's go. Oh, we have here. In the computation of EPS, the preference dividend requirements shall be treated as, excuse me, follows. Oy, nagbalik. So for cumulative preference shares, cumulative, that means, example, si 2019 nag-declare, di ba kung preference dividend, cumulative, bali ang wala na distribute, for example, sa 2019, bali pagka 2020, ma-carry over na siya. For example, may 10,000 nga dividend nga inog-distribute sa 2019, pero wala na distribute. So, mag-carry over siya sa 2020. So, for example, for the year 2020, nag-declare naman ang company sang 15,000 nga dividend. So, 15,000 sa 2020 and there is 10,000 wala na distribute sa 2019. So, cumulative. So, in total, ang inog-distribute is 25,000 na. So, we have here, if cumulative preference shares and dividend in arrears, hindi ta na pag-i-include si dividend in arrears. Pero ang aton current dividend is included. So, that means, if cumulative preference shares to siya, ang mention ko kagina, the dividend in arrears nga 10,000 sa 2019, di naton pag-i-include sa pag-compute naton sa EPS if we are dealing with cumulative preference share. Current dividend is included whether it is declared or not declared, no, sang company. Kay kung preference ya, di ba may percentage na siya nga fixed. So, mostly, kung preference, di ba ikaw ginauna when it comes to dividend distribution. So, either declared or not declared, if cumulative preference share, it will be included in the computation of our earnings per share. If it's non-cumulative preference shares, dividend in arrears, we will exclude that in our computation of EPS and we include current dividend in our computation if and only if it is declared. If it is not declared, then we will not consider it in the computation of our EPS. So to summarize, whether cumulative or non-cumulative, it is dividend in arrears, the dividend that has been declared for the previous years, we will not include it in our computation sa EPS. For current dividend, cumulative preference share, we include that whether declared or not. For non-cumulative preference share, we consider the current dividend if it is only declared. So that's the summary. So let's go with the growth ratios. The growth ratios reflect the potential strength of the enterprise in the marketplace. So we will know here if the business is growing while using these ratios. So the enterprise's market power is measured by the market value of its equity shares. So let's go back to our PowerPoint. So our growth ratios, okay, wala ko next ang presentation. We have here different growth ratios. Price earnings ratio, dividend yield ratio, dividend payout, book value per preference share, book value per ordinary share. Market to book value per share. So do you need to memorize this formula? I think no need to memorize. So let's go to our example now to understand these ratios. So we have here two different companies again, R company and J company. You have earnings per share, market price per ordinary share, dividend per ordinary share, dividend per preference share. We have a total shareholders equity, ordinary shares outstanding, and preference shares outstanding, and the preference share liquidation value. So these are the data for R company and J company. And I have also here the copy of the formula. No? But first, let's go here, which direct na ako gina-highlight, and I will highlight it in yellow so that you will see. So you have here the total SHE, no isang SHE, the shareholders equity. So for our company, we have a total shareholders equity of 10 million. And 60 million for J company. So J company is much bigger. than our company. Then the ordinary shares equity, we'll get the ordinary shares equity. You have here the data, the ordinary shares outstanding. So our company has 1 million shares and J company has 4 million shares. But can we get the ordinary shares equity with this data? I think we cannot. So we have here the preference shares outstanding. Now, so preference shares, our company has 500 preference shares. J company has 2 million preference shares. And our company has 1.3 per preference share na liquidation value. So this is also, for me, it's the same with par value, no? So ordinary shares. So sa preference share, yeah, it's liquidation value. So 1.3 per share kay our company, and J company is also 1.3 per share. So to get the preference share equity, our company has 500,000 shares times 1.3 nga liquidation value, yeah. Why? Oh. Okay. 1.3. So, ang preference share equity ni our company is 650,000. And for J company, it's 2 million divided by 1.3. Seriously. Times 1.3. So 2.6 million ang preference share equity ni J company. So if we will work back, no, since our total shareholders equity is ordinary share equity plus preference share equity, so 10 million less 650,000. So our ordinary shares equity is 9.35 million, and for our preference share, for J company, that's 57.4 million representing its ordinary shares. Okay, so maniya ginapangayo, the price earning rate, dividend payout rate, dividend yield rate, book value per preference share, and market to book value. So price earning rate is price earnings, the price and the earnings. So when we speak of price, it's market price, and earnings is the earnings per share. So that's the price earning rate. So to get the price earning rate, that would be the market price per share divided by the earnings per share. So it's 3. Do you need to express this in percentage? So for this, I think it's no need, no. There is ratio man. So you can answer 3 lang, or 3:1 since it's ratio. But I think you don't need to express it in percentage, no, kay daw pa, no, it's not a ratio eh. So if percentage in your answer, so I will mark it wrong kay we're dealing with ratio, no? So kung per share naman, so you don't need to express it in percentage, you have to express it in peso, no? Kay book value per share, market to book value per share. So let's go with the dividend payout rate. When you speak of dividend payout rate, that would be your dividend per share divided by your market price per share. Muna siya ang dividend yield ratio. So dividend payout, it's your dividend per ordinary share divided by your, I'm looking with the dividend yield. Dividend payout, it's a dividend per share divided by your earnings per share. So you are getting the ratio of your payout, no? Ang ginbayad mo as dividend when it in relation to your earnings per share, ang kung ano na ang values ang each ordinary shares ang company subong, no? So it's 0.8:1. That means you are paying 80 cents for each 1 peso of your earnings per share. So amo na siyang ginamin niya. So for each 1 peso earnings per share sa company, 80% dira is ginabayad mo, or ginbayad mo as your dividends. Amo na sa. Then for the dividend yields, that would be your dividend per share divided by the market price. So amo na siyang kinalain yung dividend payout kag dividend yield. Dividend payout, you are comparing your dividend nga ginbayad versus the earnings per share sang company. So dividend yield, the dividend nga ginpay mo based sa market price naman. No, outside naman niya sang company, no, when it comes to that particular share. So dividend yield is your dividend per ordinary share divided by the market price per share. So your dividend yield is 0.27:1. So you are paying 20.27 you are paying 27 cents, no, as your dividend in relation or in comparison to the market price per share outside. Okay? So for your book value per preference share, that would be book value per preference share, that would be your preference share outstanding divided by the preference share equity. So, am I right? Basi sulit ko. Book value per the preference share equity. Your preference share equity divided by the number of preference shares. Now, to get the book value is kung anong naka-record na dira. So, when we speak of book value, kung anong naka-record dira sa imong financial statement. So, book value, it's preference share equity divided by kung pila ka bilog ang iya aton nga preference shares outstanding, it's 500,000. So, we have 1.3. So, ang book value sang aton nga preference share is 1.30 pesos, 1 peso and 30 cents. And market to book value, that would be market price per share compared to your book value per share. No? So in here, it's are we dealing with preference dividend? Book value per share. Oh, it's ordinary. We're dealing with the ordinary share. We don't have market price for preference share. So in here, market to book value, it's a market price for ordinary share. Excuse me. Sorry, class. So, hindi ko na siya ma-edit. Market to book value, it's MPPS. So we need to get first the book value per ordinary share. Dugang tadi. So book value per ordinary share, it's ordinary shareholders equity divided by 1 million shares. 1 million shares for our ordinary shares. Okay, so it's 9.35 market to book value. So market versus book value, it's 150 divided by 9.35. So it's 16.4. Am I right? Oh. Ordinary share equity divided by the average ordinary shares outstanding. Yes, it's correct, 9.35. Okay, so these are our ratios, no? And prices for our company. Let's go with the J company, price earnings rate. So price, the market price divided by our earnings. So it's 2.5. Dividend payout, our dividend yung kinbayad divided by versus aton nga earnings. So it's 60%. So dividend yield, so ang dividend yung kinbayad ta divided by the market price, since we're looking it's dividend yield, so it's 24.24:1. Book value per preference share, we have preference shares equity divided by, we have 2 million shares, it's 1.3. They have the same book value per preference share. And first we'll get the book value per ordinary share. It's this divided by 4 million. So we have book value per ordinary share 14.35. So we have market price divided by this. So it's 34.84, right? 1.3.6024 and oops, price earnings, price, it's wait. Okay. It's price earnings, it's market price divided by the earnings. It's 2.5. So that's it. Amo na siya ang aton na nga nakuha no, when it comes to growth. So kung makita naton sino ang mas nako. So price earnings rate. It's this. No? Our company is growing more than the J company. So mas taas ang growth ratios ni R company than J company. So muna siya ang aton nga analysis dira and how we compare two different entities when it comes to growth ratios. So let's go back to here. Okay, so we're done with the growth ratios, the liquidity ratios. So for the liquidity ratios, diri naton mabalan if the company is liquid, no? If damo siya kwarta na cash, no? So the liquidity ratios reflect the ability of the business to accelerate its operating cycle and meet operating obligations and payments. So when you have enough cash, then you can pay your obligations and payments in short term, no? So the liquidity ratios are also referred to as activity or effectiveness ratios. Okay. So the basic operating ratios are as follows. So you have inventory days, no, plus the collection period. So that's your operating cycle, less your payment period, equals your net cash cycle and this is also known as your cash conversion cycle. So to understand this, I think we still have, okay. So you have here different formulas, no? For nga makuha mo ni siya, no? So ini nga formula is broken down into these formulas, no? So let's go to our okay. Liquidity. So you have there in your module for example, you're working with Quick Corporation, you have the industry average, no, as your basis, no, as your benchmark. So I have here the formula and ari ang iya nga gina-require. So you have here average cash, average receivables, average inventory, average payables, your net cash sales, net credit sales, cost of sales, credit purchases. The company uses a 360-day a year base. The credit terms offered to customers are 2, 10, and 40. This means that if you pay, if the customer pays within 10 days, so we grant 2% discount and he is given 40 days to settle his account to us, no? So amo na siyang ginaminya na. Diri naman niya, this is for receivables kaya we're dealing with customers. Suppliers, they give us 3% discount if we pay within 20 days and we have 40 days to settle our obligation with them. Okay? So amo na sa. If we pay within 20 days, we have a 3% discount and we are given 40 days to settle our accounts. So you have here for Quick Corporation. So to start with, your receivable turnover. Your receivable turnover is your net credit sales divided by your trade receivable. So you net credit sales, yes, divided by your receivables. So 25, no? 25 imo nga turnover. That means that you are selling 25 times, no? Sa imo nga receivable based on your receivable turnover. Hindi pa na class kaya wala pa ta gamit sang Ari nga 360 days ta. Collection period is 365 divided by receivable turnover. So, diri na di siya. So, 360 hambalya divided by this. So, you are, ang collection period, though within a year, nakakollect ka 14 times. Amo na siyang ginamin niya. No? Sa imong sales, ang credit sales mo na is na-collect mo siya within, na-collect do 14 times mo sa ngagin collect na siya, do I don't know how to simplify it, pero do 14 times ka nakapang-collect, no, sa imong credit sales. Amo na siyang ginamin niya ang collection period. Inventory turnover is your net purchases divided by the cost of goods sold. Cost of goods sold. The cost of sales divided by your inventory. So it's 20. Your inventory days to sell, it's 360 divided by your inventory turnover. So you have sold 18 times now within 360 days. Amo na siyang ginamin niya. There you have collected 14 times within 360 days. There you have sold 18 times, no? Do 18 times ka nagsulit-sulit, baligya, no? Para mabalik ko siya man. Para mabaligya mo ni siya, do nagbaligya ka 18 times para maubos mo ni baligya. Okay? So mo na siya. Payable turnover. Payable turnover is your net credit purchases divided by your trade payables. So sila ni Gapares, kay di ba daw nag-utang ka, nagbakal ka through utang. So net credit purchases versus your trade payables. So net credit purchases divided by your average trade payables. So it's 10. Payment period is 360 divided by your payable turnover. So 36 times ikaw nagbayad, no? Para mabayaran mo ni ang 140 na net credit purchases mo. Then your operating cycle is your collection period plus your inventory days or days to sell your inventory. So it's 32.4 days. So since wala ta 0.4 days, so we can have it 33 days. Okay? 33 days. So kung mag-amo na class, mag-exam, it's somewhat like it needs common sense nga. We don't have 0.4 days or hours. Hindi man kita da particulars amo sina. So you can have it 33 days, no? Kay kung practice ya mo na siya 33 days or not lower ito 32 kati nagsobra. So it's 33 days. Your net cash cycle is your operating cycle less your payment period. So your 3.6. Again, I have to check naman with your bisala bala kay ara da inyo nga daan sa tupad. Okay. So it's yes, it's 3.6 or 4. No, approximately 4. So I'll just make it negative 4 days. Okay. Then your net working capital. Your net working capital is your current assets less your current liabilities. So your total current assets is your average cash, trade receivables, inventory, less your payables. So your net working capital is 4,000 or 4 million. So this is expressed in millions. Okay? Tama na siya. It's 4 million. Your working capital turnover is net sales divided by average working capital. So when we speak of turnover class, si sales ginagamit na that term si sales when we're dealing with turnover. So muna siyang keyword ya. Makikita mo sa turnover, assets, ginadayon si ginagamit natin. Okay? So, sales, it's this plus this. No? Credit sales kag cash sales divided by our working capital. It's 55. 55 times, no? Working capital. Okay. Then current ratio is our current assets divided by our current liabilities. Yes. Natin current ratio. So we can pay we have 1.28 or 1.29. Utang tabi, we have 1.29 nga pwede naton ibayad for every 1 peso nga payable naton. So ano siya? Basta mo na klase ang aton nga power. Amo ni ang aton power to pay our liabilities, no? So it's good, no? Kay nag more than 1 kita. Kay kung nag-negative ang aton current ratio, this which means ang aton nga current assets is less than our current liabilities. That means that we don't have the capacity to pay our payables. Kulang aton current assets, no? Ibayad sa aton current liabilities amo na siya. So diriya may excess kita, no? Now for every 1 peso nga payable ta, we have 1.28 nga pwede ta ibayad, no? For acid test, I think it's only for acid test your quick assets, it's your cash plus your trade receivables. Yes, it's still the same. Current. Oops, not. It's not. I'm not converting inventories. Okay. So your acid test or quick ratio is 82. No? Now, nagkabog kita kay ang quick assets that consist of those current assets nga pwede naton ma-convert into cash easily. So, ang cash yes, of course, it's already cash. Trade receivables na pwede gid, no? Kay manukot tayara dahil ng kwarta. Si inventory well, we have to baligya pa kung ginutang, manukot pa ta. So, dugay ang conversion niya into cash. So, hindi siya quick ang asset, no? Even though it's current. So, hindi siya included si inventory sa computation naton sa aton nga acid test or quick ratio. So, mas tubo, no? We have 82 cents to pay each 1 peso payable naton. Pero kung current ratio current assets divided by current liabilities, kayang-kaya naton bayaran si aton nga ginutang, no? For every 1 peso naton nga utang, we have 1.28 nga pwede naton ibayad. Okay, receivable turnover, industry average, it's net credit sales divided by, average receivable, it's 15. Collection period is 360 divided by our receivable turnover. So, collection period is much higher than quick company, no? So, 24 times siya nag-collect, no, within a year para maubos yan ni sukot ni ang iyang receivables, no? Then for inventory turnover, it's cost of sales divided by inventory, it's 16. Then inventory days is 360 divided by our inventory turnover. So it's 22.5 or 23 days yang aging collect. 23 times siya nga nagbaligya para maubos yan ni si cost of sales. The payable turnover naman, it's net credit purchases divided by your trade payables. It's 8 and 360 divided by 8. Inventory turnover. So 45 times. So 45 times siya nagabayad, no, sa iyang taas. gabayad sang para maimpas ang iyang purchases na 96 million. So operating cycle, it's collection period plus inventory days to sell. So it's 46.5. Net cash cycle is operating cycle less your payment period. So it's an average of 2 days. 2 days ang iyang pag-convert sang cash. The net working capital is your sum of your average as current assets less your current liabilities. Your net working capital turnover is your sales divided by your net working capital. So it's 21.42. Oops, why? Ambalya is net credit sales plus your cash sales. Sakas. Okay, 25. Then current ratio is your current assets. Halo lang kamo klasad less average trade payables. Really, it's divide 2. 2. So, mas taas ang iyang current ratio. So, dali. So, we did this. Divided by this. So, mas liquid ya. No? Kung ang industry average, ang aton nga ginalantaw, so mas liquid ya ang aton nga gina-benchmark sang sa aton nga current nga subong tawag sini nga standing sang company. So diri naman niya net cash cycle, may note ko dira sa module nga to have a shorter CCC. So I have 32 days shorter than, I have to check last 2 days. I have to check. I really have to check. 46.5. Okay. So we do 15, 24, 16. Okay. So okay, share. So you have there your module class. Please refer Danay. Okay. I have here a note here. Your goal is to have a shorter CCC. This means that the shorter the time you convert your inventories into cash, the better. No? In order to achieve this, you can shorten the days of your collecting your receivables by strengthening your collection policy while keeping your customers intact or selling your inventories in a shorter period. You can also save storage costs by not keeping a number of stocks of your inventory. Lengthen your payment period while not compromising credit ratings to your suppliers. So cash conversion cycle, it's from pagbaligya mo in credit, from inventory, nagbakal ka inventory, so you have your inventory, ang ginbaligya mo na ang inventory, so example, ginutang ina, up to nga gin-collect mo ang bayad sa inventory nga ginbaligya mo. So, mo na siya ang cash conversion cycle. Ang ginamit niya this means that the shorter the time you convert your inventories into cash, it's better, no? Your cash conversion cycle, in here, you can determine if you are good at collecting kung nubo imong cash conversion cycle. From the time ginbaligya mo, from the time nga ginsukot mo ang bayad. So, hindi mo na ipalawigan. Kaya kung lawigan mo na, kasi palipat-lipatan lang daw nagpala, ginutang sa imo mo. So, you're not good sa suktanay. So, it's better nga na-collect mo na yun ang bayad. And, in order to achieve, to have a shorter cash conversion cycle, you can shorten the days of your of collecting your receivables by setting a strict collection policy. So hindi mo na yung pagpabuyan-buyanan niya si customer. So if good payer siya, hindi mo na siya kinanglan stiktuhan. Pero if you think that one of your, or you have customers na kabudlay sukton, so you have to set some policies with them. Okay? Para nga hindi ka man maperde, no? Sa suktanay. So mo na siya. Pero hindi mo man sila hindi mo man basta hindi mo lang i-compromise ang imong standing bala basi nga tungod tamaan sa imo kastrikto sa suktanay basi bayaan ka man sa imong customer. So medyo balansihon taman na when it comes sa mga amo sina bala nga mga bagay, no? When it comes sa sa practice na, no? So you have here, yes, strengthening your collection policies, no? Keeping your customers intact, or selling your inventories in a shorter period of time. So you sell your inventories in a short period of time, hindi ka-store sa imong inventory, so you save storage cost, kaya dasig imo baligyanay, no? Since you are not keeping a number of stocks of your inventory, or you lengthen your payment period. So dasig ang imo dasig ang sulod sa kwarta, so pwede mo pa na iya mapa-rolling, no? Gina-rolling mo, pero dugay ka pa ya makabayad. Daw man sa bala, dugay ka pa makabayad sa imong utang. Pero hindi man nga rang super due ka na. No, you make use of the days nga ginhatag sa imo sang supplier, no, to pay your obligation, no. And you have also to consider the discount that they are granting you, no. Mo naman ang mga decision making, but we will not have it this time, okay, we're dealing with the present nanay, no, cash conversion cycle. So since gina-rolling mo ang kwarta, mas mayo nga dasig ang sulod sang kwarta sa imo, and dugay siya nga makagwa, no, in terms of paying your credits. Okay, so muna sa class ang dira ando ka ang bottom line nga ang we're doing this, no, ratios, yes, we're getting these figures, no. This is not only nga formula lang sa uluhon mo lang, but the important of this is you understand why nga amo ning nga formula and ano ang iya nga use, no, kung ano ang effect niya sa aton nga decision making. So yes, let's go back here, and I think we're done with our discussion. I think we're done with our module. I'm gonna check, and also you have to check there also. Okay, so I have there this summary. You have there the summary of financial mix ratios, and paano din siya ginagamit, ano ang iyang significance, the formula, and the different ratios. So you have to review this. I'll send you your activity next week. So you have to do it. So you'll be watching this discussion during our class hours, and you can also have your activity now once I send it, but I will not send it today, it's Sunday. So once I send it, pwede nyo na mahimo kay we're done with the discussion, and submit it during the second distribution of your module. So thank you, class, and have a nice day ahead.